JB Cycles here with an update on October the 26th. So this is quite a difficult one, but let's see. Bigger picture, I have the 3.5-year cycle that was suggesting we should have made, in my opinion, a top this fall, as we tried to do with this breakdown in April. But it turned out to be a false breakdown, and the bull market has extended, and the cycle is still suggesting some kind of a weakness coming with a low sometime next summer. So I'm suspecting this extended bull market will top out before Christmas probably, and then we will see weakness into next summer. But this recovery rally has been pretty extreme, and the strange thing is when markets first are getting extreme, they like to continue with this extremeness longer than you would think is possible. I had these scenarios from a false breakdown and extended bull market, and I had these shorter ones that are no longer in play, but mostly I've been talking about these topping around November, and this extreme one from 1980 that could suggest some crazy upside before it finally rolls over. So I've been looking at my weekly data, and they are, in my opinion, saying the top is close, but it could still be up to like 4 weeks away perhaps. Let's try to interpret this situation and understand where we are, because we have this overbought situation. Here we have number of trading days where the S&P has stayed above the 50-day moving average, and currently we have been about 125 days, looks like, and there's only been 4 cases where we've stayed longer above the 50-day moving average, going back to 1950. And if I look at some other indicators that I have made myself, I have this one, days with positive momentum, or what do you want to call it. So in this indicator I have 1, 2, 3, 4, 5, 6, 7 times we have stayed longer, but 1, 2, 3, 4, 5 that were significant longer. And I have this other indicator where we have momentum staying above a certain level, suggesting an even stronger trend, or I should say no real pullbacks. And there's only been 1, 2, 3 times that it has gone on longer than currently. So this rally is in the top 5 of extremes the past 75 years. So that's pretty extreme. And at the same time, you can believe this or not, but this is my 17-week cycle, and current position here marked with green vertical lines, and the cycle here in red suggests we are very close to the cycle top. So extremely overbought, very overextended, and now at a cycle top. Now going back, we see some of these, sometimes we top out later than where we are right now here with these green lines. Any time here in the next few weeks the cycle is suggesting a top. And there's a thing here, because now my VIX indicator, I saw this already last weekend and mentioned it, the VIX was starting to give me bullish signals. And actually, so the VIX wavelet here is going up, and it is kind of projecting around 3 weeks with upside from here, and this other one is even saying 5 weeks with upside. So VIX is saying now we have started a new 10-week oscillation. Now we should continue up for 3 to 5 weeks at this very extreme overextended market and at a 17-week cycle top. Well, there's another possibility, and I have marked it here with these rectangles. It is when you have two of these 10-week oscillations kind of merging into one. And often what happens is this green wavelet is for the VIX and the red one is for the S&P. Mostly they are quite similar, but when we have these two merging oscillations, you see often the red S&P wavelet get this distorted shape, like here and like here, also like here, but not so much this one. Here actually we have two separate oscillations, and here one is distorted and this one is distorted. And as you see, this often happens at this one also, actually in 2018. It's a quite common phenomenon at major market tops. Yeah. So, if that is what is going on right now, then we should not trust this VIX signal and believe that this is a real and complete 10-week oscillation just at the starting point. Well, then actually I have a different scenario, because we are here at this point in black. Is this a low or are we making a top? So these other colored lines is the scenario for this other kind of wave, and this one is actually suggesting we are very close to a top. So you see here we have about 50 trading days. That's 10 weeks. That's the 10-week oscillation. So we made maybe a low here, and now we should rally for many weeks, unless it is this other oscillation that is of about 85 trading days. That's the 17-week cycle, which can result in a 17-week oscillation. And in that case, this scenario suggests a low around early December. So let's have a look at some analogs in this case. So we have this one from 1921, the bull market high. So if we were to follow this one, we should see a dip next week and then a final high, and then that's it. Not so much the COVID crash top, but this one also I like. 2018, yeah, we should make some kind of a dip and then a final top, and all this happens within the next 2 weeks. We have this one from 2010. Yeah, this is a bigger topping formation, suggesting a drop into late November and a Christmas rally, and then the market has a final top in January and then goes down. Yeah, there are different scenarios. I'm not going to guess which one it is for the next few weeks. I've been not so good at guessing lately, so I'm just showing you what I'm looking at for the next few weeks. I don't think we just crash down from here, and that's it. It looks to me there's still a little bit way to go. I would like to call it some kind of a double top here, materializing the next 2 weeks. And we should have in mind that we could have this crazy 1980s scenario with some wild upside coming first before it is over. So